Shares of Tesla today, they are jumping. Now, Credit Suisse is saying that the automaker has, quote, a clear competitive advantage over the rest of the industry when it comes to battery production. This coming as shares touched a 2-year high on optimism for Tesla's China factory. Dan Howley is here to break all of this down for us. And Dan, I want to start with the call from Credit Suisse because this is a notorious bear on Tesla. He's actually saying that things don't look as bad as maybe they once seemed. Why is that?
Yeah, it really has to come down to the fact that Tesla really is a leader as far as batteries and software go, and that's essentially what our own Rick Newman has been saying for a while. This is more or less a battery company, and that's really where they're going to make a lot of their bread and butter. They are the leader when it comes to getting these vehicles the distance that they need for electrics. That's something that a lot of people have, that kind of range anxiety. They had one of the first to market that was for the mass audience in the Model 3 with a vehicle that could go more than 300 miles on a single charge. It's under 45,000 if you have the right incentives, or under 40,000. So that's really kind of the thrust of it. And then, you look at something like a Ford that's now jumping into the space with its Mustang. You look at what other automakers are doing as far as electrification goes. And it really is Tesla that seems to be driving this conversation and pushing these companies. So they are the leader as far as the technology goes. And it looks like Credit Suisse is finally coming around and saying, yeah, we'll give you that.
Yeah, Dan, what's interesting, though, it seems like the war almost between the bulls and the bears seems to be simmering down just a little bit because we're used to such polarizing takes when it comes to Tesla. And this one almost seems like it's kind of right in the middle.
Yeah, and that's really, I think, the way that this kind of conversation about the company is going. They've gone away from the issues that they had, to a degree when it comes to production. We're still seeing some, pullback as far as when we'll get the new Cybertruck or the Model Y. We're still waiting on those to come to market. Obviously, China and the rollout there is going to be very big, but we're seeing some vehicles come out already from those factories out there. So this is something that I think we're going to just see more of a middle ground for Tesla. It's not going to be, perhaps this high-flying stock for as long as it will be, but it's also not going to crash as far as Credit Suisse may have thought that it would be. I think it's really just coming down to the fact that it's a company that's maturing. They've managed to get their vehicles out on time now. They're not really, you don't hear these stories about everybody from the janitor to the floor worker being forced to try to help with deliveries anymore. So hopefully it's a matter of, Elon Musk and crew kind of getting this company set and act more like a major automaker.
Or Elon Musk, I guess, sleeping on the floor or under his desk, as there was reported a little bit. All right, Dan Howley, thank you.
Hey, investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.